Oh, little golden hour background photo for you.
Wishing you were back at Marco Island, I see.
It's definitely something that goes through my mind occasionally. The most ordinary time. It's a beautiful location, and that's actually what we're here to talk about today, Lori, right?
Yes.
So I want to welcome everybody to our ongoing webinar series, Smarter Path to Banking Growth. This month, we're talking about 5 lessons from the TBA annual meeting, and I thought we would kick it off, if you don't mind. I think you usually host these and kick them off where I end up trying to facilitate talking to one of our partners or somebody with an opinion in the industry. And I feel like we always gloss over who you are. You basically come on and you go, I'm Lori Donaldson, I'm CEO of Current Marketing, and that's all we ever get. So I'm gonna like usually do a nice introduction for our panelists or for me when we do this. So allow me to do a nice introduction for you on this one, if that's okay.
That is fine. Thank you.
So welcome, everybody. Once again, I am James Hanson, COO here at Current Marketing Solutions. Today, we're going to be doing our annual webinar on the 5 lessons that we learned from the TBA annual meeting. If you don't know the TBA, the Tennessee Bankers Association, they had their annual meeting last month in May, and Lori and I were the beginning of June. Lori and I were lucky enough to attend. Lori Donaldson is here today to talk about her experiences there and those 5 key takeaways. Just to introduce who Lori is, she's CEO of Current Marketing Solutions and has been for over 5 years now. Lori has spent over 2 decades as a marketing strategist, expert tactician, and overall brand champion. She has deep roots in the financial services industry and has branched out into the technology world, as well as a couple other industries since coming here with Current Marketing. Lori understands what moves consumers and how to tap into their motivations. She is keenly aware that effective strategy is the result of rock-solid fundamentals. Product development, refined channel delivery, and deep customer awareness drives those fundamentals and combine to make for a unique custom strategy that will drive your brand and business to its proper potential. Lori received her bachelor's from, University of Tennessee, is that right? In Knoxville, is that the one? Is a licensed mortgage loan originator. Did you guys know that? Yeah, that's a secret she keeps in her back pocket. But thank you for joining me today, Lori, in this amazing discussion about what we experienced at the TBA annual meeting.
Well, thank you. That was a very nice introduction. And yes, I've served in all kinds of roles and capacities in financial services, not just in the marketing area. So it's definitely given me some an unusual perspective, I think, for a marketer. And I appreciate the intro. Thank you, James.
Absolutely. I think it is important to talk for just a brief second about our experience because it's something that we've been talking a lot about since the beginning of the year when we kind of decided as an agency to sort of refocus on one particular industry after having spent, a good 4 or 5 years looking at other industries, trying to diversify the agency. I think now that we've refocused on financial services, there's kind of been a new fire lit within the agency because it's not just you and I with decades of experience in financial services, but our creative director too has spent over 25 years working in that space. And just everybody in the organization has at some point or another dabbled in or been deep into the financial services industry. So I'm excited to be back and refocused in this way. I know you are as well, but there's also, horror stories that we have from our time in that space too.
Well, I prefer to think of it as coming home. When we went to the conference at the beginning of June, I wasn't sure what to expect because it had been a minute since we'd been to a banking conference. And it really did, every conversation we had, every time we met someone, even though these were people, some people we knew, some people we didn't, this conversations felt very comfortable, right? It's a space that we definitely have experience talking in from an expertise perspective. And so it definitely felt more like coming back home. And so I appreciated the opportunity to go there and meet with people. And Marco Island, too, wasn't too bad.
The location was really nice. I know in the past they've done it at the Greenbrier, and they've done other places outside, typically outside of Tennessee is where their annual meeting happens, which is weird. There's plenty of beautiful places in Tennessee, but it is nice that all these bankers from Tennessee get to go to a place that's a little outside of where they would normally get to spend, a couple of work days and maybe even a Sunday. So we had a great time at this event. I can't stress enough what a great job the TBA does in putting these together. Mm-hmm. Not only is the location beautiful and the resort where it was held is beautiful, the JW Marriott in Marco Island, but the speakers that they lined up were great too. The sessions that we were able to attend, the events that they held around it, those were all really nice. And I know and this is not part of our top 5, but I will mention maybe this is a top number 6. And this is probably something for more of the people who attend as service providers or partners in the industry, not necessarily people who are bankers, but you will find tremendous value in the social events that the TBA holds. So there's great learning and conversation during the structured events, but in the evening when they host, a dessert or we went to what did they call that? The banquet that they had on the last night. Those events really have, I think, they provide a great opportunity for you to not just unwind at the end of a long day, but also to really interact with other service providers and with people who are actively working in and suffering through some of the troubles that we've seen bankers have. So I found those events to be great. Did you have a particular one, Lori, that we attended that you thought was maybe more exciting than the others?
I think the last day was my favorite day. And part of that was we had a great kind of headlining speaker that came to share his experience, and it was a phenomenal story. But I agree with you. I think the closing reception banquet was probably the most valuable conversations that I had all week. You really get to spend time with the people that you're sitting with at the banquet, and I think that is definitely for people who've skipped it in the past. In the future, I would recommend attending it. And I know sometimes it's tough for people. It's on the last day in the evening, so it means you're spending an extra day. Oh, darn. And, Marco Island or whatever beautiful resort town they choose. But, and also it felt very family oriented that last day. The closing reception had family photos, which was great. You got to see, people who brought their kids and their grandkids taking pictures together. That was so much fun. And so I just really enjoyed that last day. Plus the weather was phenomenal. So you can't beat that. But every day to me felt packed to the gills with great speakers, great content, really nice programming, and really nice quality kind of social events. Yeah. So I did appreciate it. If I had one complaint and you didn't ask me, it's that coffee's not available 24/7. As you know, we are a coffee-focused company. We need our coffee like intravenously would be great, but otherwise just have it available all the time. But other than that, like very few complaints. It was really well done. And I appreciated, again, the opportunity to be there. And also, I think, these state shows, many of them, especially in the South, I've noticed, are all about the same time of the year, typically go to an out-of-state location. And I think that's because it gives people the opportunity to combine a family trip or vacation with the conference. And so I think that's very kind of forward-thinking of them, because you've got bankers from all across the state that attend. So if you were to host this in, let's say, Gatlinburg, the people in East Tennessee would probably be a little bummed because they don't get a trip out of it. So I like that it's in an off-site, out-of-state location. To me, that was great. And quite honestly, my first time in Marco Island, I'm not sure about you, James, I found it to be really beautiful. So I do hope they go back. But I think they announced the location next year was going to be in Colorado Springs.
Yeah, it's in Colorado Springs, I think. Yeah, which is also a beautiful location. And if we get a chance, I'd love to go there next year. Yeah, I think that Billy Carroll, the outgoing chairman, right, there was a transition, I think, on that last night of a new chairman, but he's the guy that runs Smart Bank out in Knoxville, and I think he's been chair for the last year or so. Under his leadership, this event, went off great speakers, great alignment. You mentioned the last speaker on the last day, which, funnily enough, I think you had recognized the gentleman's name in the program.
Yeah, I did.
I didn't, and I just saw that it called him an American mountaineer. I didn't realize it was the guy that they made a movie about,
Yeah. What's his name?
Aaron Ralston, yeah.
Aaron Ralston. So, it's funny because I think we were separated at the time, and I remember going, I've got to get to that session, and I think you came a few minutes late, but wow, what a emotional, all the emotions, right? He was funny, he was lighthearted, he was intense, he was, emotional, he kind of acted out what he experienced when he was stuck in the canyon for, I believe it was 6 days.
127 hours.
Yeah, a roller coaster of emotions that kind of session was, but really appreciated the opportunity to see him. He was great.
Yeah.
But what was your favorite part? You asked me my favorite day, so.
My favorite part is, as usually is at these conferences, because I'm a nerd, is the, for lack of a better term, the emotionally agnostic reports we get from economists. Who get up there and without any sort of, there's no spin on it. It's very much like, so I think they had Nancy Lazar there from Piper Sandler, and she was very much like, first of all, it was like speed round with her charts, which I appreciated. I don't know that everybody likes that. Some people looked like they were getting nauseous, but the way she ran through the economic indicators that bankers should be looking at, right up my alley. And the pace and speed and frankness at which she did it, I thought was to me, that was weirdly my favorite conference moment. My favorite social moment was probably after the dessert event, when we got a chance to hang out with a couple of and meet some people from B1 Bank. Those guys were great, and a few other service providers. You don't always get a chance to meet people that also are talking to bankers about their problems every day,
right?
Trying to solve issues for them. So it's always good to kind of gut check your own service offering, and then also to kind of hear that the same sort of pains that they go through are the same sort of things that you experience. So it was a great experience overall.
Yeah, agree. And I found her to be almost exactly as you described. I was very excited to see her on the agenda. I really looked forward to that session. I think at times I struggled to keep up with her just because of the pace. She's so intelligent and so well versed in the area of the economy. What does that mean for financial institutions? And it was speed round is absolutely right. And Nancy, if you happen to see this video, call us. We'll help you through PowerPoint.
Right.
No, but she was great, and I was looking forward to seeing her a lot. So.
Yeah, so that was good. So anyway, that's those aside. I think we had compiled a list of things that we thought these are the lessons that we should take to help inform our own product offerings and the way that we talk to bankers, both in Tennessee and I think a lot of these apply nationally. And I think that there's also an underlying current here to the 5 things that we identified, and really the deposit acquisition, new household acquisition is probably the thing that runs through it. But as we go through this, I think it's probably important to touch on how this all works together in the ever-evolving macro environment that we're all living through right now.
Yeah.
So if you don't mind, I'm going to go ahead and I know we compiled this list probably a couple weeks ago, but is it cool if I just dive in with our notes and
I think so. Yeah, we can just chat about it.
So I think we agreed kind of in descending order. So the 5 things that we thought were important that you should be focused on. Number 5 was this idea that there obviously has been a major shift in the regulatory environment since January 20th. Or I guess January 6th, whatever the swearing in date was, but definitely since the 20th. That was made evident by there was a session, I think on the first full day that they typically call like the view from Washington or whatever, right? And they bring in a couple of people that are either on governmental affairs committees or maybe are lobbyists for the industry.
Brandon Milhorn, who's president and CEO, Conference of State Bank Supervisors out of Washington, and Greg Gonzalez, who's the commissioner from Tennessee Department of Financial Institutions. He's out of Nashville.
Yeah, Greg Gonzalez from the TBA.
Having those two on a panel together was very powerful, in my opinion.
Yeah. So Greg Gonzalez has been head of the TDFI for a long time. Mm-hmm. He did a great job of kind of explaining what the state level interaction is with some of these federal agencies and what the impact is kind of across the board with some of the changes. I mean, there's things that I think all of us are aware of. Even if you're not in the banking industry, you're aware that the Consumer Protection Bureau has either been dismantled, defunded, defanged, whatever word you want to use. It's probably not going to exist in the same way that it did last year.
Right.
And that's just newsworthy, sure, to regular people, but it also has a major impact on how bankers can position and market their products. So it's something that we all in this industry need to be aware of. And then, there's this other idea that clearly something else is happening on the parts that you don't see. Where, for instance, the Office of the Comptroller of the Currency, where maybe some of mergers and acquisitions get reviewed and approved, where it may have been a little bit slower under the last administration, is now considerably faster. So
I think that's the hope that M&A and the creation of de novo banks will not be a thing of the past. So I think, you can see in the past many years, especially in the state of Tennessee, very few new banks were created. Mergers and acquisitions take forevers. And so I think that the hope, anyways, is we see the creation of new banks and that M&A has become more expeditiously handled. So I would agree with that.
And I think we've seen, even in our local market here in Middle Tennessee, we've seen a couple of acquisitions happen that I think they were waiting approvals, and things are happening a lot more quickly now, which is great. Another thing we heard a lot of, number 4, I would say on the list of the 5 lessons, is don't diminish the importance of AI. These conferences are always a little weird because of the generational mix, right?
Oh yeah, definitely. It was very apparent that there is across the board a variety of banks that are a little bit more tech forward, a little bit more ready to embrace new technologies, and some that, for whatever reason, are lagging behind. And whether that's a decision made on behalf of the board or they just don't see the need for it, whatever the case may be. I mean, you could see this when you still have banks talking about just now launching technologies that have been around for other financial institutions for 5-10 years, then AI is going to just blow them away. So we had people on panels that talked about, oh, this is how I'm using AI in a very forward-thinking way, and others that are like, we haven't even touched or thought about it. I think if there was a topic that was undervalued in the program, it would be AI. And I think the reason for that, this is just my opinion, is because nobody quite yet knows what to do about it, or what to think about it, or how to utilize it, or what to tell their staff to do with it. So many questions. So it was probably even a struggle to find someone who was willing to speak publicly about how they're using AI in their institutions, for fear of, people misunderstanding the concepts, for fear of people thinking, well, consumers aren't going to like it. It's going to replace humans. It's going to replace employees. There's a lot of fear, misunderstanding, questions. And I think we all have that, even people who, like us, have, as soon as we found out about AI, embraced it and tried to understand it. So,
yeah.
Sorry, James, I jumped in there.
And I think these are the kind of places where you can start to socialize the importance
of
AI and AI tools. And they did talk about not just general AI, but agentic AI, if I could speak, which I don't think a lot of bank executives consider as an approach for the future, but it absolutely is. Not just from a resource standpoint, but from a risk mitigation standpoint. I think it's going to transform the industry over the next couple of years. So it's, it was definitely good to hear what they did talk about. I was happy to hear, but you're absolutely right. The depth wasn't there. There needed to be more. But who knows? Maybe the marketing and tech conferences that the state level associations have, they probably spend a lot more time on it.
Yeah.
So.
But yeah, I just think I think AI should be, no matter your industry, should be, if not the most talked about thing, it's definitely should be second on here. And, and I know a lot of people come to these conferences because obviously we've had, a political change since the last conference, a change in leadership, which has trickle-down effects certainly for everybody at this conference. But AI should most definitely be probably the second most important topic on people's agendas these days. But it wasn't ignored, and it was brought up in every session for sure. But anyways, it was, I think that because we see how much it's already changed our industry, we know that that's coming for other industries as well.
Yeah, absolutely. So it would have been nice to hear more, but I'm glad they did kind of socialize it at the level of the audience.
Right.
Probably the right amount, but I just wanted more. I think the third lesson that we heard, this was more validation for us, and that was that regardless of your asset size and the way your balance sheet looks today, core deposits are where it's at. And I think a lot of this has changed a little bit since I was more heavily in the industry, in that core deposits now do equal household relationships to a lot of bankers. It didn't used to. They didn't used to have the same kind of equity in their mind. But it does, when you say core deposits, they understand you're talking about getting a core checking product diversified, hopefully with a lending product and or an additional savings product, and are acquiring the bill pay and primary payment engine for that household. And I know you and I both heard that story from a couple different people there, and it really just reinforced where we've had our effort for the last 5 or 6 months.
Oh, if I could have stood up, raised my hand, and said, "We can help you get core deposits,"
right?
Come talk to me after. I think I would have been trampled. It was definitely not a concept. It was definitely something that got brought up time and time again. Banks are out there competing over deposits, no doubt. Some of the smaller markets are not having the burden of a Chase or a Citi or a Bank of America in the backyard. but they're coming. And so, our story to those smaller, I call them small, some of them are not small, they're just in less populated urban areas. They were like, oh, we have our market wrapped up. We've got, XYZ amount of share in our market, and we're not hurting core deposits. I understand you aren't today, but they're coming. I mean, I think here in Nashville, Chase opened, I don't even know how many locations in 1 year. So just when you think retail banking is shrinking, branch banking is shrinking, some of the bigger institutions are actually expanding into new markets. So core deposits is something, if you're not focused on today, you should be focused on. We definitely heard it we heard it from the bankers that are in more competitive markets where they have larger regional banks or national banks to compete with. So that's what T3, that's what our program is. That's how we help people to compete in the market, is to get those core deposits and do it in a data-driven way. So we're definitely good to hear that people are focused on that. I don't know, your thoughts, James?
Yeah, 100%. And I think the idea that, usually I would have to bring up, a definition of what I'm talking about when I say core deposits. Like, I'm not just talking about opening a checking account. I'm talking about a profitable household relationship. And you don't even have to talk, like, they're focused on profitability. They understand.
Of course.
There's all these elements that feed into profitability, both non-interest related and interest income related. And so to hear kind of the same things that we've been preached back to us as something they understand is important was great. That really made me feel like, okay, and also when we would talk to them about our solution and how it's data driven, it's the creative is vetted and people understand that it works, and that there's this focus of incorporating some of these AI engines into the predictive modeling. I think that made it all kind of sync up for them. So it was good to have those conversations. And like you, it made me feel like, banking is like a comfort food industry for me. I don't know how else to explain it. It just feels like,
Right. Good to be back. To be back, that's for sure. So that was, what are we now down to two? The second?
There's two left.
Okay.
There's two left. And I think both of those are actually kind of related to the economy in general, which you cannot escape from right now, no matter what kind of conference you're going to. And not surprising, one of the lessons we learned while we were there was that bankers and the people inside the industry and periphery are concerned about the volatility and the short-term impacts of tariffs. And one speaker called them taxes. Another speaker would call them tariffs. I think just like everywhere you go, there's mixed messages about that and mixed understanding about how it's all going to work.
Yeah, and mixed emotions.
Yeah, and mixed, right, and mixed about, reception to it. But what I think everybody understands is that in the short term, they expect costs to increase for manufacturing. And in the short term, they expect costs to increase for consumers. And it's odd. I mean, obviously, the international landscape has changed dramatically in the last week. And we went to this conference nearly a month ago.
Right.
Not much has happened in the last month. In a June, which is usually not a time of high activity. But I think the lessons we learned in that, or the things that we heard and the lessons we took away, are still the same, which is that I think that there's going to be impacts from this economic policy, specifically tariffs. The question becomes, when people say short term, what do they mean?
Right.
So we've got another 2 weeks before a deadline passes where there's about 65 countries that have yet to make a tariff deal. 2 of those countries, I believe, include the ones where I buy my coffee from. I mean, like this could be But not to sound selfish, this could turn out to be a major impact on my day-to-day spending. I'm not the only one who's looking at it like that. I mean, there are plenty of consumers in this country, 350 million of us, who are looking at the impact of these tariffs across countries. So what does short term mean? Does it mean in the next 2 weeks we're going to see some sort of shift in economic volatility? Does it mean 6 months? Does it mean 2 years? I don't think anybody knows, but they keep saying short term impacts.
Yeah.
Is that what you got to from the stage?
Yes, and I think the person who spoke to tariffs specifically the most, I definitely think that that was Catherine. Was it Catherine? No, it wasn't. It was looking at the agenda. Oh, it was Nancy. So Nancy, the economist, spoke in depth about her opinion on tariffs and what she expects to see as a result. I think actually you verbalized it. She's concerned about tariffs. She didn't personally seem to care for the tariffs because I think as an economist, she sees that that's going to potentially push us into a recession.
Right.
And she also knows the impact that it's going to cause on the small business owner and the trickle down effect that will play in banks, across the country in terms of lending, cash flow, all kinds of things. So I think she's concerned, and I think the rest of us are as well. So we'll just have to see how that plays out.
Yeah.
I'm hoping the tariffs are a short-term thing that we just have to deal with the short period of time, initially go away. I definitely see the small business owner being impacted by tariffs. So, as you know, most of America is a small business, are small businesses. So we'll just have to see.
Yeah, I think the capital markets guys too, they talked a little bit about it. Both the economists, the commercial lenders, the capital markets people, they all have kind of the same view, which is that if the bigger, broader theory here, economic theory, is that you're taking capital from the public sector or the government and putting it back into the private sector by lowering taxes and reducing regulations, then eventually this will have a positive impact. But the complexity of doing that and all the different things that need to happen outside of just changing trade regulations are so vast that I think that's why this idea of short-term impact, what does that mean? Like, even if you put the tariffs in place and everybody's paying a little more for these things and it makes it harder for small businesses to buy raw materials, and because they can't buy those raw materials, they have a harder time getting financing for their next batch. Like, all those things will cascade if this all takes more than 18 months to normalize.
Well, and I mean, if you were to compare it to another global event, much like the coronavirus, I see supply chain breakage. I see that as a long-term impact here, either from businesses that go out of business or cannot afford the raw materials, or the shipping cost is too much, or the consumer's not willing to bear the brunt of the additional costs. Whatever the case may be, I think we see some businesses short-term going out of business, small businesses, and long-term problems with supply chains. Yeah. So we'll have to see.
And it's funny to think about. I know people, maybe people watching this who think like, why are we talking about the supply chain? Who cares about raw materials? The reality is, commercial banking in America is the grease that keeps the entire machine running.
Yeah.
Bridge between my last order and my next order. It's because I was able to go to a community bank and get short-term financing. I was able to go to a community bank and leverage an asset that I had from my previous, success to turn into something new. And I've got the capital now because I've partnered with a community bank. all this stuff rests on the ability of community banks to continue to lend. And the only way they can continue to lend is by driving deposits and cash flow on the other side of the balance sheet. So all of this is an interconnected system that has to be working delicately and properly. And if tariffs disrupt that by not being cured by something else in the economy, that's when we'll have an issue.
Yeah.
And that was a big part of what.
Yeah, and you know, I don't want to end on a negative note because it certainly was not. Yeah, we are not going to. It was definitely a positive experience and a positive I think a lot of positivity, which lends us to transition, I guess, to the number one takeaway we had from the conference, and. I would sum it up in one word, and that's optimism. I think that there was a lot of optimism for the future. I think that the bankers that we talked to, the panelists that we heard, the speakers that we heard, for the most part, felt very optimistic about the future of community banking. And I do not think that that's always been the case.
No.
So I think everybody felt very good, very refreshed, very hopeful, and so that was good to hear, and that was definitely an overarching theme for me.
Yeah. So I think the number one lesson we learned from the TBA annual meeting was that for the first time in a long time, bankers are full of optimism for the future. Now, they always behave, I believe, optimistically by hedging towards the future. They make loans for the future. The optimism is baked into the industry. The reality is they were expressing it from the stage in conversations. Like, it is clear that they feel like there are less headwinds, more tailwinds.
Yes.
And though there will be, as we just talked about, short-term impacts of some of these things, they feel like it is all in service of right-sizing some things that have been wrong in their mind for a while. Yeah. So where that, I think, is even more keen is the fact that this is happening in Tennessee. We have some of our congressional representatives that are on Senate and House banking and finance committees. We have people that are leaders in that space in our state. And because between that and the direction that the administration is going, I think a lot of community bankers feel like their voice is being heard, and it hasn't for a while. They've felt like they've been ignored for a while. And now they feel like they have a voice again at some of the highest levels of government. And that is, for better or worse, that is creating optimism in the state of Tennessee for sure. And I'm just the way some of this was articulated, I have to imagine community bankers across the country are feeling the same way. So it was interesting to see that optimism expressed. I certainly hadn't seen that, not since they got, TARP money back in the early 2000s. Had I
more relief than anything.
Right, but I seen this sort of enthusiasm out of community bankers, but they were definitely feeling like for them things are moving in the right direction.
Yeah, and one of there are many reasons I had that takeaway. One of the things that I heard loud and clear was that these institutions want to be able to run their bank the way the board wants to run it, the way their stakeholders want it run, the way their customers and their communities want it run. And I felt like they felt like finally, for the first time in a long time, they might be able to do that. Number one. Number two, obviously what we spoke about earlier with mergers and acquisitions and the possibility and the future of new banks coming out because of just this change in administration, change in, I think, from top down, what banks are going to be allowed to do. I mean, my personal experience, is having regulators sitting in the office next door to me, not year round, but a lot of times very closely to year round. And so So I think that they're going to maybe experience, for the first time in a long time, some reprieve from that. So definitely a message of hope for the future. We are, of course, pro community bank. We want to see more of them. We want to see them being successful. We want to see them helping their communities, helping the small businesses in their communities, helping the residents of their communities. They're the lifeblood, in our opinion, of how America runs. So the positivity, the optimism felt great, and I was very happy to see that. And of course, that's good for us as well as a company that supports financial institutions, helps them to acquire new customers and acquire deeper relationships with existing customers. So all that being said, that was our biggest takeaway. How about you, James? Did I miss anything in terms of the general optimistic, hopeful message that we heard?
No, I think the optimism in general is probably pervasive across the community banking across the nation. And I think the fact that it may have been Billy Carroll, one of the speakers said basically that Tennessee is the tip of the spear when it comes to being national advocates for community banking and a model for how community banking should evolve. So I feel like there's this feeling of optimism in the state of Tennessee that they are setting an example and providing guidance nationwide for how community banks should flow into the future. So it was definitely interesting to hear all these Tennesseans talking about where things are going. And it was nice to see them feeling good about it. It's always good to be in a room full of people that are happy rather than grumpy.
Absolutely. Well, we're definitely going to be participating in more TBA events as they come around, especially here in Nashville. And so hopefully this was helpful for people who didn't have the opportunity or the chance to attend. And then I hope we did a good job kind of representing what we heard from the conference in general and what our takeaways were. But
yep. And if you did attend and you think any of our top fives are nonsense, I'd like to hear from you too.
Yeah. Comment below.
Yeah. Chime in with your comments. But I think that was it was time well spent at the event, and we learned a lot. We heard a lot of good things. As you mentioned, Lori, it's always hard to decide which one to go to because a lot of those overlap, and we don't have like a deep sales team of people that we can send out to 6 different state shows at the same time. Like we have to pick and choose which one we think is most appropriate. And we felt like this year Tennessee was probably the right one to be. Maybe next year we go to Kentucky's. I don't know. We'll see. We got or Ohio. They always have a good one.
Yeah.
But it was good. It was a good event. I'm glad we went. I learned a lot. And, I look forward to, we've been reaching out to some of the people that we met there. We look forward to kind of talking to them about what T3 has to offer. I think you and I also found there was a couple of other opportunities. On the technology side, there's a couple of community banks that have neglected their technology stack for a while because they weren't sure what the future would hold. And now they feel a little bit more optimistic and positive, and they're starting to develop a plan for 5-10 years into the future. So now it is time to invest in their brand. It's time to invest in their website. Those are things that we help with too. So we've reached out to a few, kind of just try to move that relationship along, see if we can help them with that.
Yes.
But yeah, if you're a community bank, credit union that's interested in those kinds of things too, we also do that kind of work, and we're happy to help with either building on your existing tech stack, finding better ways, connecting your front line to your core in smarter ways that might involve a CRM or rebranding. We do all the things here.
That's right, we did. All right. Well, thanks for setting this up. And until next month, do we have a topic for our next webinar yet?
No.
Okay, that's okay. We'll announce it soon, I'm sure.
I think July we had a data and analytics expert teed up, so I got to follow up with him and see if he's.
Oh yes. Okay.
So.
Yes. Until the next one, then.
Yes. Thanks for joining me, Lori, and thank you all for watching. We'll talk to you guys soon.
All right. Thanks.